In this video, we'll walk through projections in Cashflow Frog. Projections are future transactions you expect to happen. Every forecast is built from two types of items. First are real transactions like open bills and invoices. Second type are projections, expected or planned transactions that haven't happened yet. On the home screen, you'll see the total number of projections in the Cashflow status bar. Click that number to open the full list. Cashflow Frog supports three types of projections. First are auto-generated projections, created automatically when you first connect your company. Cashflow Frog analyzes your historical cash activity to build an initial forecast. After that first session, new items are not added automatically. Instead, they appear as suggestions and only become projections if you accept them on the Suggestions tab. Second are user-created projections. These are projections you add manually. We'll show how to create them in just a moment. Third are imported recurring transactions, such as bills, invoices, expenses, and other items, imported directly from your accounting software, also appear as projections. To create your own projections, click the green Add Projections button in the top right corner of the screen. This opens a table where you can add one projection or several at once. For each projection, enter the amount, positive for inflows, negative for outflows. Select or create a customer or vendor, choose the relevant account, add details if needed, and set whether it's one-time or recurring. When you're done, click Add Projections to save. Now let's see it in the forecast. Projections are only future dated. When the expected date arrives, the projection disappears because Cashflow Frog automatically replaces it with the actual transaction synced from your accounting software, even if the amount is different or no transaction occurred. This keeps your forecast accurate and up to date on a rolling basis. Your original projection is not lost. You can still view it alongside the actual amount, making it easy to compare expected versus actual. You can also adjust this behavior in the projection settings, where you can choose whether projections should be removed automatically or pushed forward one day at a time until deleted by the user. Inside the Projections table, you can include or exclude projections using the toggle switch. Review all projection details such as dates, customers, vendors, accounts, and amounts. View upcoming projections and edit specific items in the forecast. And apply bulk actions to include, exclude, delete, and change time. And increase or decrease the amounts. Let's take a quick look at the projection settings in the top right corner. These options control how projections behave in your forecast. When a projection reaches its expected date, by default, projections are removed on their expected date and replaced by the actual synced transaction. The recommended setting is to avoid duplicates. You can choose to let projections roll forward one day at a time until deleted manually, but this can create extra work and duplicate amounts. 2. When a projection conflicts with a bill or an invoice. If a projection overlaps with a real bill or invoice, for example, a projected customer payment conflicting with an expected invoice payment, or an actual customer payment that has already occurred, Cashflow Frog automatically excludes the projection for that period to prevent double counting. 3. Include recurring transactions from your accounting software. Cashflow Frog can automatically include recurring bills, invoices, expenses, sales receipts, and journal entries from your accounting platform. If you prefer not to include these items, simply toggle them off. That's it. You now know how projections work and how to customize them to match your real cash flow expectations.